Hi, everyone. Today we have a very special guest. We have Doomberg. How are you today, Doomberg?
Hey, Darren, great to see you again.
Great to see you as well. There's a lot going on in the energy markets, and I asked you to come on just so I can hear your take. You're an expert in the field. WTI was sitting at support for a while, and then it was, popped up, and it's like, kind of looking weak to me. What's your opinion on like oil demand in the US?
Yeah, so it's obviously a very important question and one that we give a lot of thought to. And in fact, we like to say that the single most important question an analyst can ask themselves about any particular economy, either regional or global, is, are the energy markets, the primary energy markets, well supplied or not? And we just have a glut of hydrocarbons in the world, predominantly natural gas, especially in the US, driven in no small part by two factors. One, OPEC, because it's a cartel, works very hard to keep oil prices higher than they otherwise would be, which then motivates oil drillers who also co-produce natural gas, especially say in the Permian, to keep drilling. And then you end up in a situation where for many months of this year, natural gas in the Permian Basin was selling for negative prices. You couldn't give it away. You had to pay people to take it. Natural gas is a very clean burning fuel and a very valuable hydrocarbon. And ultimately, the forces of arbitrage are working as we had predicted across many pieces late last year and earlier this year. And in fact, there's a really amazing story in the Financial Times just yesterday that was chronicling the revolution in long haul trucking in China, which are being rapidly switched at a pace that is shocking everybody to natural gas powered vehicles, specifically LNG powered vehicles. And this is causing a huge drop in the demand for diesel. And then when you couple that with the drop in the demand for gasoline because of the sheer volume of electric vehicles that are being produced in China, and then you combine those two things with the inelasticity of commodities, you see that you have a serious headwind to prices, i.e. natural gas, engine switching, cheap hydrocarbons don't stay cheap forever. And so people are sort of still looking as though oil and gas are completely separate molecules, when in reality, we're seeing a blurring of the definitions. And in the long run, all hydrocarbons will trade for their energy content, normalized for logistics. And right now, natural gas is in abundance. OPEC is desperately trying to keep the price up, and they're failing. And in fact, we also think that perhaps the prospect of war in the Middle East has been exaggerated for reasons that we can talk about. But yeah, that's our main view. Anytime there's an abundance of any of the primary energy inputs, that's usually a dampener for all of the primary energy inputs, because to an extent that matters with respect to inelasticity, these are relatively fungible materials.
The liquefied natural gas is something that the U.S. is kind of taking the lead on. I read that the infrastructure has to be there for natural gas, or else, there's a lot of problems. So, how long do you think that would take to build out the infrastructure in different countries for there to be kind of a migration from gasoline or diesel to natural gas?
Yeah, so actually, this is a bit of a nuance here. Where China gets its gas isn't as important as the fact that it's using LNG engines to burn it. And so it gets an enormous amount of gas from pipelines. There's the Power Siberia 1 pipeline connecting eastern China, northeastern China to Russia. And then there's this very large and consequential pipeline that originates in Turkmenistan, which we recently wrote about. So once you get the natural gas, all you really need to do is switch the engines to burn it. Now, China is an LNG importer, and the U.S. is a major LNG exporter, the largest in the world now, and there's plans afoot to substantially increase that. But there's also environmental and political backlash. And so we have today still a sea of natural gas in the US. And it's not just engine switching in China, of course, that will happen. Eventually they'll do it here, but China just operates at a much faster speed. And so if if China is knocking down, let's say, 500,000 barrels a day of diesel demand, that is going to show up in oil prices substantially. The analogy we like to use is when Biden released 1 million barrels a day from the SPR over 6 months, he cut the price of oil in half, and that was only 1% of global demand at that time. So these things move pretty violently with small perturbations and changes in physical supply. And so to your question about natural gas, yes, major infrastructure is being built. We noted with interest that in the 2024 statistical review of world energy, 14% of the globally traded natural gas molecules went through LNG cargoes. which is pretty profound. And at some point, these markets are going to harmonize because they will be sufficiently interconnected such that the natural forces of arbitrage will work.
Now the play with natural gas wouldn't necessarily be UNG. It would be more of the companies working with natural gas, or do you see the demand for natural gas picking up the price of the actual commodity?
I think the commodity price almost has to go up, and we wrote about how natural gas is probably going to be a bridging fuel for AI, just because you could spool up natural gas turbines much faster than you can nuclear power plants, even ones that have just been turned off and you want to restart. Those take time. The exponential growth in computing power is real. Society normally rearranges itself to keep us on that curve. And so what has to happen usually does. And in this case, we think it has to be that the cheapest hydrocarbon on the board, which happens to exist in the country with the biggest suite of data centers and the largest technology companies, that equilibrium is going to be met. Like, they're going to burn natural gas. We envision enclosed pods in the Permian where natural gas goes in and data comes out. And you don't need federal permits to build those. And I could see that happening rather quickly. And so, yeah, we wrote a piece where we predicted that the sort of the ratio of the price of oil divided by the price of natural gas is one of these rules of thumb that you look at as an analyst. On an energy content basis, that ratio should be 6. But in the US, recently, it was as high as 45. And now it's come back into around 25. And we think it could go even lower. So we'll see. But that's the position on the board. Look, natural gas is also very heavily dependent on the weather, because one of the primary things we do with it is heat it to warm our homes in the winter. And so far, it's been a relatively mild fall, and we're seeing natural gas prices come back in after testing the $3 a million BTU at Henry Hub earlier this month. So lots, as you said at the beginning, lots of forces going on, but we think, at $2.40 a million BTU today, natural gas is basically less than $15 a barrel oil on an energy basis. And that's an arbitrage that will have to close.
Yeah, it's interesting. I'm glad that you elaborated on the whole AI connection to natural gas. I heard another energy expert touch on it, but he didn't get to elaborate. And yeah, I thought that was important. He worded it as AI needs natural gas, but it makes sense from what you're saying. So I watched a documentary. Australia is supposed to get like 6 or 7 nuclear power plants, and there's a lot of division over them. And some of the topics that were brought up were, they said that the energy prices, the electricity prices rather, do not come down with nuclear energy. That the nuclear power plants get a lot of subsidies from the government, and there was just like an array of different criticisms on AI. What are your thoughts about that? On nuclear energy, rather. What are your thoughts?
I think almost all of those criticisms are tantamount to nonsense. When you compare 80 years worth of stable baseload capacity factor, 90% or more nuclear power to intermittent renewables like wind and solar, it's really the equivalent of comparing a banana to a bag of chips. I mean, I think, yes, they both have caloric value, but nobody would confuse the two as it pertains to which is healthier, right? Nuclear energy is artificially expensive in the West for political reasons. A small but loud and powerful group of Malthusians who oppose, the number of people we have on the planet, frankly, have lobbied to gum up the legal and regulatory regimes to the point where it takes forever, which is, of course, an input into the cost because of discount factors and things like that. China is cranking out nuclear reactors at a fraction of what it costs us to build them, at 5 times the speed. These are just political choices. So there are people in Australia who would like to make nuclear energy as expensive and as difficult to build as possible for reasons that I don't quite understand. And they have been largely successful, and same here in the US. But even with all of that, as Microsoft showed with the 3 Mile Island deal, AI companies are going to be willing to pay up for secure, steady supplies of electricity. I mean, what is electricity worth? Electricity is not worth what you and I pay for it, because it is heavily subsidized up and down the chain. It's worth way more than that to the marginal buyer in a shortage. And it's only in a shortage you find out what you'd truly be willing to pay for electricity. And the thing that makes this a bit confusing or difficult for people to see is that you do get an electricity bill and a water bill, same type of market, that scales at least nominally with how much you use. And so you think that you're paying a fair price for it, and the more you use, the more you pay. Well, that's the more you use, the more you pay is true, but that still doesn't necessarily mean it's a fair price, like in a truly open market. And so because these things are sold at a huge discount, this is why you see, for example, people pumping out the aquifers in the US, because like you get the value now, and the societal impacts of that down the road are not for you to carry. And so nuclear is always the best choice. Just look at Germany, for example, and the consequences of having impaled itself by proactively shutting down perfectly operable nuclear power plants. We're writing up a piece right now on Taiwan, who's also shutting down nuclear power plants and imports 98% of its energy. Like, what are you guys doing? So curious to see how the debate in Australia ultimately works out. We're watching it with interest. We would fade the possibility of those things actually getting built. I just think Australians have so much abundance that they were allowed to be dumb about a lot of things for a very long time. And I suspect that they will not make the correct decision here either.
So it's you don't really have a competition with like electricity, right? Like I can't go out and choose a different electricity company. I only have the one. So how does like competition play into it to lower the cost of energy to a point where, it gets cheaper?
Well, I mean, energy is already dirt cheap. That's the thing. Like on an inflation adjusted basis, we think that $70 WTI is expensive. It's dirt cheap. If you look at the inflation adjusted price of oil using like $1983, which is what I think the Bloomberg machine does when you plot that, it's like $22 a barrel right now. If the way we like to do it is we plot the either the number of ounces of gold, the fraction of an ounce of gold it takes to buy a barrel of oil, or some people prefer to plot the number of barrels of oil you can get with an ounce. And if you plot that over 50 years, oil has never been cheaper, with the one exception of the COVID, negative pricing. That we can all agree that was an outlier that is not sort of instructive to trend. Oil has never been cheaper. I mean, the technology embedded within the oil and gas companies and the rate at which they improve it, they are giant deflationary machines. They will drill themselves out of business. They have no discipline, for one. And on top of that, oil is a managed market. We have a cartel in control of 40% of supply who is proactively and artificially keeping prices high. So energy prices are cheap. Now, how should the electricity markets be managed is an interesting question. That whole policy around what's a public good and so on. But we're coming into conflict with that right now, because these AI companies can't really be connected to the grid. They would just soak up all the power and make it expensive for everybody else. And so I think we're going to see this solution that we talked about earlier, not connected to the grid, no need for transmission lines, closed loop systems where natural gas goes in one end, and there's plenty of it to be had there, and data comes out the other. It's a lot easier to send data around the world than it is to send molecules around the world. And I think that trend is just inevitable, and one that you could bet on. Now, you asked earlier about investing against that trend and whether you just buy UNG. We don't typically like to invest in producers or the commodities. When you're trading commodities, you're trading against people who trade commodities for a living, basically. We prefer the sort of picks and shovels. So what companies are going to enable this thing that must happen, or anybody who's able to close or benefit from arbitrage. So there's a few, natural gas producers that we would look at. EQT, for example, we don't own it, and it's not a recommendation, but the Rice family knows how to make money, and they seem to be pretty well positioned for the boom that's coming. But anybody who can sort of close that arbitrage is going to benefit substantially.
My wife worked for an energy company, and they're like trading oil, and there's just a lot of room for error. And what we're talking about AI, some of the use cases of AI could be to manage the grid and do things that like having a smart grid and having technologies that utilize the energy in a more efficient manner than to allow human error into the picture. So I'm really excited about what AI can deliver to humanity.
Yeah, look, I mean, we are knee deep in AI. It's something I've gone down the rabbit hole on for personal and professional reasons. I'll say the following two things are true. it is incredibly disruptive. It is a much bigger deal than the internet was, .com. And we have a similar bubble brewing. Um, both things can be true. Like when the .com bubble burst, that wasn't the end of the internet. In many ways, it was the beginning of the real internet, because the survivors were the proven ones, and they went on to become Amazon and Microsoft and Oracle and pick your favorite, right? And pets.com didn't, right? And so I think, for example, NVIDIA is a giant super bubble. It doesn't mean that it can't triple from here, but I wouldn't own it. It's just every dollar move in that stock is 25 billion in market cap. It's crazy, right? And the Chinese are going to steal all their technology. Like we know how this ends. But it might end with NVIDIA topping 300 from 140. I mean, who knows? So don't listen to me for stock advice. But we are in a huge bubble. And at the same time, AI is scaringly transformative. It's a wild, wild west on the open source part of this. OpenAI is a laggard compared to what's going on for free on the internet with no guardrails whatsoever. It'll blow your mind what's actually going on at the cutting edge of AI development.
It's not just AI either, right? You have blockchain, AI, quantum, drone technology, nanotechnology, the list goes on and on. Like when the internet bubble took place, it was just the internet. When you had the railroad bubble, it was just the railroads. When you have all of these technologies converging at the same time, like the use cases are going to get sci-fi really quick.
No, I went back and reread Ray Kurzweil's The Singularity is Near recently, because we wrote a piece last year actually called Fission Chips, where we predicted that nuclear would be brought back into the sort of acceptable energy resource seat at the table, in large part because of the need to power data centers with SMRs and things like that. And I went back and reread that book. It does feel like we're on the cusp of a Kurzweilian singularity explosion, as corny as that sounds, but it's actually kind of real. And the book was pretty prescient. If listeners haven't or viewers haven't read it, I highly recommend at least reading the first chapter. But again, this book was written many, many years ago, and in the piece Fission Chips, we took a picture from the book of where he thought the world's fastest supercomputers would be by 2023, and we were right on the curve. I mean, it's pretty creepy actually when you look at it. So the subtitle of the book is "When Humans Transcend Biology," and it's pretty scary to contemplate.
Yeah, it's really exciting. Honestly, it's like the next step in evolution. So I wanted to know like your opinion on modular reactors, and you were mentioning AI about Bill Gates. Like if we were to power some of these data centers, we would need to have some of these power plants to run off the ground quickly. Do you think modular reactors are an option, or the LNG route would be more feasible?
I mean, I think it's going to be an all of the above strategy. The main constraint to using natural gas is, of course, this concern about carbon emissions. Now, I think people aren't really going to be concerned about carbon emissions for very long. I think that sort of crisis has come and gone. Peak ESG was put in at COP28 in our view. But SMRs are an interesting technology. Again, if you're thinking about societal level grid applications, then you don't really need SMRs. Like big modular reactors are just fine, and put a bunch of them together and you'll be good to go, like the UAE has done. But small modular reactors do come with a few benefits, not just for AI, but also for heavy industry. The latest generation of reactor designs can produce industrial grade steam, which is useful, and you can decarbonize steam. Actually, the production of steam for industrial purposes is something like 11% of global carbon emissions, more than personal transportation and aviation combined. And there's no real way to do that today. Almost all of it is co-produced with natural gas at a cogeneration facility where you make electricity and steam. And the old style of reactors aren't really capable of generating industrially relevant steam, whereas the new styles can. And so if you put an SMR in behind the fence line at a chemical plant, for example, which is already pretty well secured and guarded 24/7, you can imagine that would be a thing to do. But for the speed with which AI is consuming electricity, I think necessitates that natural gas will be the bridging fuel, which is why we called the piece bridge burning. So I think SMRs are nice and should be pursued and will be part of the solution in a few years. But the speed factor, I think, is going to rule out all other choices except natural gas.
So I read that uranium is really abundant. So the price of uranium, would that be solely on like the political pressure that's in the uranium market, or is it simply just being able to produce enough enriched uranium to feed the machine, so to speak?
Well, you've quoted two different commodities there. The uranium price that everybody in the retail world buys and sells and trades, the Sprott Physical Uranium Trust, that is not enriched uranium, of course. Um, that is a precursor to enriched uranium. And so there's an enormous amount of uranium in the world. We know where to go get it. And on top of that, one of the biggest canards in the energy debate is this whole fear around quote unquote nuclear waste. Nuclear waste is, in fact, just stored potential energy that we go back and retap anytime we want. In what we would call nuclear waste today, we've only extracted 5% of the theoretical embodied energy in that uranium, and you could just pass it through the fast breeder reactor and recycle it. And future generations will undoubtedly recycle the quote unquote nuclear waste that we are producing now. And the reason we don't today, again, politics, is because you produce a little bit of plutonium when you do that, and there's fears of proliferation. But it doesn't mean that theoretically, in the Star Trek future where all the nations get along and we have, a stable world without war, you're going to take all of that quote waste and you're going to repurpose it and get way more energy out of it before it becomes truly spent. And you could do this multiple times, and we will. And so, and the other thing about uranium, though, which is sort of foundational to the bullish case, is the price of uranium could triple and nobody would notice. I mean, unlike a natural gas power plant where basically the entire expense is natural gas, the operation of a nuclear power plant is far more sophisticated and costly, and safety mechanisms and so on. Like the fuel itself is a comparatively small input to the operation, whereas if the price of natural gas triples, your electricity bills are going to see it right away. Not the case with nuclear.
I watched like a TED talk by a guy named Jeremy Rifkin. He wrote a book called The Third Industrial Revolution. And his criticism with nuclear energy was the amount of fresh water that you would need to cool the reactors. And we just don't have that much drinking water. My thoughts are, I can't use seawater, I can't use anything. So I just want to hear your thoughts on that.
Yeah, I think that's we're not running out of water. I mean, we just did we have two tiers of our product offering. One is just for our articles, and then we have a pro tier where those people get, in addition to our articles, a monthly webinar that we put a lot of thought into. And by coincidence, we just did for our September Doom Zoom presentation called Water, Water Everywhere. And we walked through the different types of water, the energy it takes, because really, the purity of the water that you need is just a derivative of energy, and the input of energy you need is the delta between what you start with and what you need. And the needs for cooling water are relatively low. It's not the same as, say, drinking water, which is, of course, it's literally a produced chemical. Drinking water is a chemical. I don't know if people know that, but it is taking fresh water and treating it with other chemicals to bring the concentration of certain impurities to certain levels that we deem acceptable for the public to drink. That is a chemical product produced in a factory. We don't think of them in that way because it's just water, but it's true. And so when we're running up against the limits of the thermal cooling capacity of the oceans, I think we will have much bigger problems to worry about. I think that's nonsense.
Yeah. So I've been critical over Bitcoin mining. I'm certainly into crypto. I just always saw it as wasteful until the Kingdom of Bhutan recently spent an enormous amount of their GDP on Bitcoin mining miners. And they have a lot of hydropower, and the hydropower pretty much powers the nation. They're even able to sell some of it, but they didn't use the hydropower to capacity. The Bitcoin mining, they're able to use that capacity and then kind of mine the Bitcoin, sell the Bitcoin, and then expand their hydropower. So I just kind of wanted to hear your thoughts on the expansion of energy with Bitcoin mining.
Yeah, so I think there are pockets of sort of unique local energy circumstances that make the decision to use excess energy for the purpose of mining Bitcoin a rational one for the owners of those energy facilities. We actually wrote relatively favorably on the topic a couple of years ago when we were writing about Bitcoin and crypto a little more than we do now. But the sort of visceral counter argument is that this is a waste of energy and the carbon associated with it. So I'll give you one example where I think mining Bitcoin makes a lot of sense. Because of the forced introduction of intermittent renewables into the US electricity grid, for example. You have all of these backup power plants that are needed to stay on standby for when the wind doesn't blow at night. If the wind doesn't blow at night, we don't have battery backup of any consequence to do anything about that. And so what typically happens is grid operators turn to what are known as peaker plants. They come online to shave off the peak demand for electricity because wind and solar haven't shown up that day. By the way, the costs of operating, owning, and capitalizing those peaker plants is never counted against wind and solar, even though they wouldn't be doing those things if it weren't for the presence of wind and solar, which is just one of the many fallacies of the green energy movement. But nonetheless, for the purposes of this answer, it would make sense to allow the owners of peaker plants to run their plants at a higher capacity utilization and swing between feeding the grid and mining Bitcoin so that they could at least earn their cost of capital for being there. And so that's an example of we have this cheap natural gas. We have the need to be ready to feed the grid, but the grid rarely needs us. How about we mine Bitcoin 22 hours a day, and then in the 2 hours of the day that the grid needs us, we stop mining Bitcoin and we feed the grid. And so that way you allow the owners of the peaker plants who are basically enabling renewable energy to at least make some money while they're on hold. So there's lots of little pockets like that. And if you have a nation powered by hydroelectricity and the rainy season is stronger than you thought, and you wanted to run down the water behind the dams to safer levels, well, then you want to do something with that electricity. And so it might make sense there. I don't think it's a broad thing in the way that AI demand is going to be very, very broad, but there are pockets where, mostly because of renewables, electricity prices often swing negative, and one of the ready recipients of cheap energy would be Bitcoin miners, and they don't have the same kind of demand, matching objectives as a grid operator, so that they can be more flexible about when and how they do their mining.
I read an article Kitco News put out, and it was about solid state batteries. And I think the article said that it would take like an hour of charging for it to run some enormous amount of time, like 24, 36 hours, and a ton of miles for an electric vehicle. And it would take up a kilogram of silver to produce the solid state batteries. I just wanted to hear your thoughts, and do you think that could play a potential role in the silver market?
No, is the short answer. We've written about this a few times. I've been in and around heavy industry for most of my adult life, several decades, and solid state batteries have been 3 years away from 30 years. And by the time they are developed, technology in the auto industry will have evolved to the point that they'll be too expensive to implement anyway. We won't see any meaningful amount of solid state battery penetrate the auto sector until the 2030s at the earliest. And by then, you just look at BYD today, which is sort of the largest electric vehicle manufacturer in the world, far bigger than Tesla, by the way. There's a reason why Warren Buffett owns a big chunk of it. They produce a car today, plug-in hybrid, that on one full tank of gas and one full charge can go 2,000 kilometers. And the battery in there is cheap and small. There's no way solid state is going to compare with that on a cost per mile basis. So if you're bullish silver, there's lots of reasons to be bullish silver. Incremental demand, stampeding, demand for solid state batteries is not a justifiable thesis in our view. There's lots of reasons to be bullish silver, not the least of which is the sort of gold silver ratio seems to be getting out of hand a little bit. And it is widely used in solar. And there doesn't seem to be much in the way of incremental supply coming online. Most of silver is not mined on purpose. It's pretty inelastic. It's just mined as a byproduct of other metals, zinc, copper, and stuff. I in my youth, I once worked at a very large mine and worked in the chemical labs, trying to figure out how much silver was in the concentrate so that we could bill the customers appropriately. Silver is rarely an on-purpose metal. Most of it is produced as a byproduct, and much like natural gas in the U.S., that can distort things. Yeah. So, but there's reasons to be bullish silver. Solid-state batteries, not among them.
You talked about the gold and silver ratio, but I'm also seeing things like platinum, palladium that just, historically platinum and palladium are always above gold in price, and they're more scarce than gold. And it just doesn't make sense that the other precious metals are trading so low while gold is making all-time high after all-time high. What are your thoughts on the kind of arbitrage play, if that's the right word, between the different precious metals?
So when markets distort, we never dismiss it. Markets tend to be pretty good, not perfect, but pretty good, right? And I think there's a deeper story here that will permanently break potentially, those traditional, what you call arbitrage, I would call historical correlations, because it's not like they're fungible metals, right? And that is, I think, gold is reemerging as a neutral reserve asset for the settlement of international trade imbalances. And there's a big meeting next week in Kazan that nobody's talking about in the West that might see the BRICS countries roll out a new mechanism for settling such imbalances that involves gold and a basket of other currencies. And so one explanation for why gold goes up every day is that central banks around the world know this is coming and are pre-buying and positioning themselves to be in a world where gold is once again at the center of international trade. The US dollar, and in particular US treasuries, replaced gold as the neutral reserve asset in the 70s. But that's a temporary thing. And we think the weaponization of the US dollar is only driving this and accelerating it. And so keep your eyes open for what comes out of Kazan next week. By the way, because the meeting is hosted by Putin and Putin is a dragon, nobody in the West wants to talk about it. But it's a real thing. There are dozens of really important countries going to be there: India, China, Brazil, South Africa, Russia, many countries from the Middle East. The desire to do business bilaterally without the oversight and sanction risk of the US Treasury Department is real. And I think the sanctioning of Russia's reserves, the freezing of them, and the threat to actually seize them was a catastrophic mistake on the part of the West, and explains why gold is touching $2,700 an ounce today. By the way, I own an uncomfortable amount of gold. I'm sure many people listening own an uncomfortable amount of Bitcoin or crypto. I own an uncomfortable amount of gold, and I'm not talking my book. Gold is the only asset I own that when it goes up, it concerns me because of what it might mean for the rest of my portfolio, which is denominated in US dollars. So many people count their net worth in the number of Bitcoins they own. I count my net worth in acres and ounces. It's a savings vehicle for me. It's not an investment. But gold has been on a tear, which scares me. That's usually not a sign of societal tranquility.
The U.S. sanctions that just seem kind of dumb, right? And it's people that are supposed to be experts in the field that are creating the sanctions. The guy that did it was like nicknamed Dr. Sanction. And I listened to another one of your interviews where you say, like, if you wanted to help Russia, this would be the best way to do so: bring the price of oil down and sanction them. And that's pretty much what we did. So it's
the way to hurt Russia was to overproduce commodities, drive to crash the price of oil, and bring the price of oil to below Russia's break even. We didn't do that. We sanctioned oil, which caused the price to go up. Anytime you introduce friction into a commodity market, prices go up. We wrote very early in 2022 and got a lot of crap for it, to be honest with you, but we've been proven correct. Like when we had the first Gulf War, James Baker went around to the Middle East and said, open up the spigots. And people listened. That's when people still listened to the US Secretary of State. And we kept the price of oil down. And that's basically because, Saddam Hussein was funding his war machine from oil profits. We could have done the same thing here. Joe Biden could have called all the CEOs of the major oil companies. They tend to be pretty patriotic people, by the way. Conservative, no doubt, but rah-rah pro-America, they would have temporarily opened the spigots. We could have leaned on our allies, Canada, a few other of the major producers in the Middle East, and flooded the market. Now, if oil was trading at $20 a barrel after Russia invaded Ukraine, Putin would have a much different position of strength or weakness today than he does. But instead, we're still, fantasizing about green energy and solar and wind. And meanwhile, oil has been above 70 and touched 130 in the aftermath of the war, breaking out. So we just failed in that regard. The sanctions were designed to backfire. It's one of the great mysteries of our time that nobody with any industrial experience seemed to be advising any of the Western leaders when this insane, stupid policy was rolled out. And Putin has been laughing all the way to the bank. We're going to cap the price of Russian crude, as if that was ever going to work. Like these are the policy pronouncements of juveniles. It's really bizarre. It's truly one of the great mysteries of our time.
It would be bipartisan either, regardless of who was in the office. The reaction out of the White House would have been exactly the same, which would be sanction everybody, tariffs, everything. And in this day and age, you don't need SWIFT anymore. That's what the whole crypto movement's about. You don't need banks.
Of course. Look, this BRICS alternative is going to be on a central bank digital currency ledger. Right? The technology is moving beyond the tools of yesterday's war. It's so bizarre. It's truly strange that our leaders just don't see that. We still operate as though we're the only superpower in the world. Like we're in denial that China owns all our military supply chains, right? Like one of the things that really shocked me when Putin invaded Ukraine was this I call this sort of Peter Zeihan techno arrogance that the West owns all the technology. And if we pull away our technology, all of these massive economies are going to collapse. Like I've competed against Russian companies or Indian companies, and especially Chinese companies. Like there's an entire university in China dedicated to producing petroleum engineers, and it has thousands and thousands and thousands of students in it. We produce 600 petroleum engineers a year in the US total. Like Russia, whatever you think of Putin, is a very sophisticated society. And we used to call Moscow State University Genius School. Like whenever I was looking for new talent, if somebody had Moscow State University on their resume, it was almost a no-brainer to hire them. Like they are a very high technology, sophisticated country with an enormous resource base. And we could lie to ourselves and say those things aren't true and assume that the absence of Halliburton is going to cause Russian oil and gas production to collapse. And that's just deeply naive. And the most naive thing we've done is to assume that because Western companies won't insure oil tankers, we could put a cap on the price of Russian oil, as though the insurance policy was more of a moat than the oil in the tank itself. Only somebody who has spent no time in industry could conceive of such a thing. The conceit behind it is staggering. And people just laugh. Of course, commodities always have middlemen willing to break the law, black markets. It's like the prohibition in the US made the Kennedys rich. Why? Because somebody was going to bring the booze to market. Like you're not going to suppress this. Energy is life. You're basically telling the world that because they can't get insurance from Lloyd's of London, they can't have life. Please, this was insane. I don't understand it. Like I genuinely would like an explanation for how these policies were formulated, articulated, and implemented with any semblance of hope that they would succeed. It's insane. Sorry,
Yeah,
rant over, rant over.
I think you answered your own question. I think it's malicious intent, and people have investments outside of the U.S., but that's something that you can't prove. But I was watching a documentary on the cartels, and like the whole China getting tariffed for sanctioned and tariffed. Like all they did was just send their products to Mexico, and then Mexico just shipped them to us and bypassed all the tariffs. So wherever there's rules set up, there's a way to bypass those rules. And yeah, energy is life, but like even gizmos and
Sure. I mean, you can't go without our gizmos. I mean,
yeah,
the inelasticity demand for gizmos is off the chart.
yeah. Yeah, it's just funny to me. And when Russia first invaded Ukraine, I watched wheat prices just skyrocket, and now like they're trading, you know, uh, pretty low. And the same thing I'm seeing with orange juice, coffee. I see a lot of these soft commodities shoot up and then they drop drastically. Do you think that's going to continue? Like, do you think what wheat did is going to play out into the other soft commodities?
I mean, I think generally speaking, we've learned a lot through this, right? And we've grown and we've written 325 articles now. And when we read our older ones, we cringe and our newer ones read better. And I'm sure 2 years from now, when we read what we've written this year, we'll be, ooh, but such is life. One thing that we've learned, and this quote from Nassim Taleb has stuck in my mind, which is gluts don't always follow, shortages don't always follow gluts, but gluts always follow shortages. And so whenever you see a blow off top in a commodity, the easiest trade in the world is like a 9-month put at half the strike because they collapse. Commodity prices collapse. Supply comes online. These companies have no discipline, be they farmers or oil producers or copper miners. If you see a super spike in a commodity, a blow off top, an Icarus print, as my friend Tony Greer would say, you don't even need to call the top. Wait till you're 10% below the top and then buy a 9-month put at half the price. And it's almost like guaranteed alpha. We saw it in natural gas. We saw it in oil. We saw it in wheat. You see it in coffee. You see it in lumber. The market will respond. They will over respond. Everybody will chase that print and you'll have a glut. And so that's, to me, I don't like to trade commodities except when there's a really big fat pitch like that coming down the middle. And it doesn't matter. Like if oil spiked tomorrow because war broke out in the Middle East and it spiked $135 a barrel, I'd wait for it to hit 120 and then I'd buy $60 puts because it's going to 20. It just is. It always does. It's a surefire trade. And so, yeah, when the war broke out, people sort of listened to the Zyhans of the world. And we got caught up in that too. I mean, it's kind of hard to look at the screen and see prices go where you thought they could never go. But again, we learned from that. We probably hung on to the crisis thesis too long, but we were quick to call the upcoming glut. And I think we've had a pretty good run of calls in the commodity space this year. I give ourselves like a B plus, I suppose, if we were being introspective. But I think anytime you see a super spike in a commodity, that's an opportunity. What I would never advise people to do is to try to go long in anticipation of such a spike. It's much easier to know when you're in one than to call one in advance. And so this stuff in the Middle East and so on, like, again, we have a different view of what's going on. I would not get long oil on the thought that war might break out. I'd wait for war to break out and then fade oil on the spike.
Awesome. I appreciate that. The knowledge that you have is vast. You mentioned the different commodities and the commodity producers just pretty much mining more in the case of copper or whatever. But does that factor into gold? Is gold isolated from what you were talking about with the other commodities?
Yes, I do think so. I mean, first of all, there's not really a big industrial use for gold. And we're seeing, look, if gold reemerges as what we think is, in its rightful place as a neutral reserve asset. What do I mean by that term, by the way? Neutral reserve asset means no government can sanction you for it. And by sanctioning Russia's 300 billion reserves, mostly denominated in euros, by the way, the West has basically defaulted on the neutrality of its reserve asset status. That's Russia's property. Whatever you think of the war and the war crimes that I do believe are being committed by Russia in Ukraine, most notably the targeting of civilian electricity infrastructure, which is going to make for a calamitous, potentially make for a calamitous civilian emergency this winter if it's a particularly rough one. That's a war crime in our view. Like, we're not Putin files here. But the sanctioning of Russia's reserves was just, as we said earlier, a catastrophic blunder. It revoked the neutrality of treasuries as, full faith and credit of the United States government, asterisks, unless we disagree with you politically, right? That's not neutral anymore. And any country in the world who has ever been or might one day be in the crosshairs of whoever happens to be in charge of some Western country no longer can trust that the U.S. treasuries are money good. That was a profound. We wrote a piece in the days after that announcement because we just really couldn't believe it, called "On the Cusp of an Economic Singularity." I have a bit of a photographic memory for the pieces we've written because I live each one, right? We knew then that this was a major moment. Like, this would be as big in hindsight when history of this time is written. That decision will be as big as Nixon getting off the gold standard. So if gold is to reemerge in its proper role as a neutral reserve asset, because you can't really sanction gold, right? In the same way that Bitcoin, right? So, as long as you have your keys, it's your Bitcoin. Gold needs to be much more expensive than it is in US dollars, because the market cap of gold is just not big enough for it to play that role. And that's why I think we're seeing gold go straight up. Now, that doesn't mean it's going to go to 5,000. In fact, 2,700 freaks me out. How much I own. This is now becoming like a risk for me, and I will probably begin to take a little bit off the table, and maybe buy back in on a pullback, because things don't go straight up forever. As I just said, especially about commodities. But gold is different than the other commodities if it is going to be reinstated as a neutral reserve asset used for the settlement of imbalances in international trade. That's what it used to be. That's what it basically always was until, Nixon removed the U.S. from the gold standard. Because even when the dollar was used or treasuries were used, it was still tied to gold. So it was just sort of a secondary gold standard, I guess is the way you would say it. But at least you knew that you could go to the U.S. gold window and trade your dollars for ounces. Few people did. But France's effort to do so actually created the crisis that caused Nixon to break the gold standard. And we've been having a 50-year anomaly, really, ever since.
So I noticed GDX is not even near all-time highs, and you would think logically the gold miners would follow gold, and there's kind of this gap between them. Do you think that that's a potential play, or is that just
investing in gold miners is fraught? Even in an ETF that sort of allows you to diversify risk. The gold mining industry has burned investors several times in history. Various sophisticated financing schemes. We have a good friend who just started a fantastic Substack. You should have him on your show, called Market Vibes. We call him Sir JJ Jack Johnston. He wrote a great piece detailing the history of gold and how project financing distorted the commodity markets as people were hedging and participating in futures and so on. People don't trust the management teams, especially of junior miners. There's a lot of risk. Now, look, there are people who spend all of their time studying every filing of every junior miner and occasionally getting a 100-banger and make a killing doing it. I don't have the time for that. I don't have the patience for that. We have a business to run that we've built that we're proud of. So to those that do that, great. You can't do it casually, in our view. And there's a huge discount to value applied to gold miners, junior miners in particular, for good reason, because they have not earned the market's trust over the decades. So I would encourage people to check out JJ's Substack, Market Vibes. I think it is jj745.substack.com. Great guy. 50 years of trading predominantly in gold and oil. A real great Substack. He does a morning and an evening read out each market day, and he taught me a fair bit about why it is that gold miners get no respect.
What about silver with gold being the attractive play for central banks? I personally, invested in a ton of silver, and I'm watching gold hit all-time high, and I'm feeling like I missed out.
Yeah, I don't own any of consequence. I mean, I have a couple of hundred silver eagles and Canadian maples and so on, and that's mostly just for barter in time of crisis because I suspect that people will put too high a value on silver, confusing it with gold. So maybe I'll get some extra toilet paper with that American eagle that I own. But all kidding aside, I just haven't studied the market closely enough to give you an intelligent answer. I know it's used in solar. I know we don't produce enough of it. There's a structural shortage. $30 an ounce seems really cheap to me. Doesn't seem like there's a huge amount of downside from there. I wouldn't object to somebody putting a few percentage points of their net worth in it. And I could even be convinced to do that with me. I have far more gold than a few percentage points of my net worth. Maybe I'm just dumb and lucky and I should take it all off now, but most of it's just sitting in my retirement account, so I don't worry about the tax consequences. My view, unlike silver, which is a hybrid between a monetary metal and an industrial metal, gold is really just a monetary metal. And so if you're looking to invest in a monetary metal, you may as well just go with gold.
What are your thoughts on a NATO defeat with Ukraine, Russia?
I mean, I think it's inevitable. And I think the thing that keeps me up at night, that keeps the team up at night, is how does NATO respond to a defeat? You can't win a kinetic war against a nuclear superpower. Like I don't know how we ended up in this spot. There seem to have been a few diplomatic off-ramps that we could have chosen to partake in, most notably the Istanbul Agreement, which was somewhat reported contemporaneously at the time, but the history on all that will be, left to others to work through. War is terrible. This war is terrible. The biggest victims of this war by far are the people of Ukraine. The country is being ransacked. An entire generation has left or would like to leave. Civilians have been targeted. The electricity grid has been destroyed. The country, there had to have been a better alternative than this. Now, look, people who are emotionally connected to it might get angry at that. Putin is a monster and all of these things. And I understand that. And that's a very rational response. I don't live there. I don't know anybody who lives there. I don't know really anybody that lives in Russia. As an outside observer, the biggest loser in all this by far is Ukraine. And what do we have to show for it? It's going to be a tough winter. So the biggest risk on the board is how NATO responds to an outright loss. We haven't even talked about the Middle East yet or China. But there's hot spots. And I think we're seeing sort of late stage capitalism play out. Like the debt system in the US and Europe is quite literally, provably, numerically unsustainable. And how we get through that great reset is a very dangerous time. And war is often an outlet during periods of huge transition like this. But now we're talking about war with, like, Russia has the largest and most sophisticated stockpile of nuclear weapons in the world. What are we doing? I'm old enough to remember hiding under my desk as an elementary school student because the world could end. So, we are where we are. We'll see what happens. We'll see who wins the US election and so on.
Yeah, it's almost like it's a perpetual debt machine and they need to print money and get it overseas because of Triffin's dilemma. I posted something about a civil war, and there was an overwhelming response of support for a civil war, almost celebrating the idea. What are your thoughts on an American civil war or a national divorce?
There's no such thing as a good war, civil or international. And people who are cheering such prospects have no earthly idea how devastating war actually is. And I was going to say in my previous answer, war is the ultimate failure of diplomacy. And it's easy to be a keyboard warrior and talk tough on Twitter. You don't want to experience war. You don't want to be drafted into a military. You don't want your cities to be razed. You don't want to live life without the modern comforts that we've grown. We've really been sort of we couldn't live without them at this point, right? And Ukraine is going to have to live without a lot of modern conveniences this winter, like heat and water. And war is terrible. And one of the things that really frightens me is the flippant nature of some of our leaders who throw such terms and policies around like they don't have consequence. Like take Lindsey Graham. Like sometimes people punch back, Senator Graham. And one of the reasons why you don't start wars or you don't go looking for them is because you might lose them. Right? Like nobody should be looking for civil war. I don't know how it is that politics became such a team sport with such polarity. That's not good. That's not healthy. We should be all investing in bringing the temperature down. One of the things we try to do, for example, in the comments section of our pieces, which is just tiny, irrelevant little part of the world that means a lot to me and not much to anybody else, we demand civility. Like rude comments get deleted. It's not a free speech zone. Anyone in the comments is paying subscriber. We're there to educate each other, and we try to lead by example. Find the highest road possible and take it. If more people did that, we would be in a better place at a society level. Unfortunately, we don't. We are in a race to the bottom. It's the lowest common denominator. Politics is a blood sport, literally, and that's not healthy. That doesn't end well. But yet we seem intent on repeating the ugliest parts of history, and nobody wins in a war. They just don't.
Yeah, what concerns me is it doesn't take the consensus to start something like that. It just takes a couple of extreme people, and then everybody kind of gathers around them, and things escalate from there.
Look, we were an inch away from it in Butler, right? I mean, it's insane to think what could have happened. And as we said in a piece we wrote about Butler after, it took a few days, and we had a piece ready to go that we ultimately pulled. Because it just didn't seem right to publish on anything other than what had transpired in Butler. But like people that were bemoaning the myths were unaware of the violence they were inviting into their own lives. That violence will show up. Again, your surprised observation of how many people were hoping for a civil war should give you pause. This is not, if you're taking the vitals of a patient, this is not a good sign.
Yeah, it's scary and upsetting, honestly. Well, on that note,
on that happy note, yeah.
where can we find you? Where do we find you?
Yeah, okay. The hour flew by, Darren. I appreciated the opportunity to come back. You can find us at Doomberg.com. We recently ejected a squatter from that website. At no small expense, but I suppose they made a wise investment. So everything that we do, our podcast appearances like this, our articles, our pro tier presentations, can be found at Doomberg.com and navigate your way through there, or go directly newsletter.doomberg.com is another way to just get the articles directly and see everything else that we have to offer. We have two tiers. Our annual subscribers get all the articles, and our pro tier get the articles plus the full archive of some 40 set piece presentations we've built and delivered for our pro tier over the years. And it's been years, which is kind of crazy. But yeah, really appreciate the opportunity. Fantastic discussion, and thanks for having me back.
Yeah, this was awesome. And you're right, the hour did fly by. Doomberg.com, as well as other socials, will be in the description below, as well as the pinned tweet. I hope everyone found this educational. I certainly did. And I appreciate you coming on, Doomberg.
Yep. Talk to you next time.